tuning into another weekly market analysis. Like I do it every Sunday, I make sure I post my weekly market analysis here on YouTube so you can also get to know the pairs I'm looking at, the thought process that went behind those pairs, and opportunities available. So you can also use it as a confluence or whatever strategy you are trading. And even if you're a beginner, you can also get to learn something from how I analyze the market. So without not wasting much time, let's just get started. So, guys, I welcome you once again to this weekly market analysis, and there is a very good opportunity ahead of the week. I think last week we spoke about some few pairs that we were looking at, even though it was a U.S. election. Some other traders were, kind of afraid to trade the financial market. But if you have a very good strategy and the market is already meeting all the criteria that you look up for before you take a trade, then I think it doesn't care whether it's a U.S. election or not. You just execute. And last week we discussed about AED NZD for a buy opportunity, and it played out like we were anticipating. It was a very good trade that I really enjoyed last week. And as you can see, last week I think I'll leave the description, the link below. Those who didn't enjoy or those who didn't get to watch last week's weekly market analysis, I spoke about AED NZD, that you're looking for opportunity from this session to the upside, and you can see this a very nice 123 pips profit I made last week, even though it was US election. But the market exploded to the upside, and I also spoke about CHF JPY and Euro JPY for also a buy opportunity. And also I got triggered and I ended up on break even on those pairs. So as you can see, last week was a very profitable week for me, even though some people were kind of scared about it, but I was still profiting from the market. But this week I want to share some few pairs with you. I have a USD card. I have a AUD USD, and I have GBP AUD. They are all presenting a very good opportunity for me, and I think is going to be very good if you pay attention, so you can also get to learn something from this analysis too. So without not wasting much time, let's just get going. So starting from the weekly time frame, we are seeing something very interesting right here. You can see the market currently testing a strong support zone. Where is the strong support zone? We can clearly see the strong support zone right here. The market made this strong impulse. The last time the market made a strong impulse to the upside was this place, exploded to the upside, and then reversed all the way, testing the strong support, for which you can anticipate another move or a reversal from this session all the way to the upside. And also when we use our Fibonacci retracement tool to measure the impulse to see where the retracement is going to end, let's use our Fibonacci. We can see that the first requirement that we look out for a retracement to end after an impulse move, that is the 0.382 Fibonacci retracement, and that is this level. Let me set my line well. That is this level. So we can anticipate more moves on more bullish moves on the USD card on the monthly time frame. So on the monthly time frame, we're anticipating a buy move, because the market is currently testing a strong support zone, for which you might expect a reversal. Moving down to the weekly time frame, what can we see on the weekly time frame? Things are much clearer on the weekly time frame. Let me just take this rectangle off here. Things are much clearer on the weekly time frame. We can clearly see the market made an impulse to the upside, and after the market testing this resistance zone right here, the market reversed immediately all the way to the downside, also testing the monthly support zone I was telling you about, for which we are anticipating a buy move or from this session all the way to the upside. So you can see that currently USD card is testing a strong support, for which you might expect a buy. It's currently trapped in this zone in the weekly time frame. The USD card is currently trapped in this zone. We have resistance zone here, we have our support zone here, right here, and you can see the market just ranging in between those levels. So from this level, you can anticipate a move from this level. You can anticipate this coming. You can see, you might anticipate, you might see the USD card showing signs of a reversal from this level all the way to the upside. And when you go on the on the daily time frame, things will be much clearer for you to see what I'm talking about. So let's just move on. Let me use my, yes, let me take it off. Yes, I like using the naked chart. Yes, so clearly on 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 the daily time frame, you can clearly see that the market is last week. You can see the market made a strong moves to the downside, breaking some previous lows and currently testing, a very strong support zone for which we have already spoken about on the monthly time frame, on the weekly time frame, and also on the daily time frame. Too, we can see the market also testing this zone. So we have all these three higher time frames, saying the same thing, that the market is also, testing a strong level for which you might expect a reversal. But even though we are looking for a reversal at these zones, even though we are looking for a reversal at these zones, we won't just buy immediately when the market opens. The market will try and grab, liquidity around these zones before it will make the move to the upside. What I mean by liquidity here is the market will try and stop or trap some retail traders at the wrong side of the market. The market might decide to do what? Let me just use this tool. The market might decide to just, or let me take this one off before I can make this illustration for you to understand what I'm trying to say. The market might just consolidate around this zone, even try to break this low, and retail traders will think, oh, it's about selling. They will start getting in for a sell, and the market will just reverse, come back, consolidate, and just push all the way to the upside. That is what I mean by liquidity. That's what I mean by liquidity. And the market will try and grab some liquidity around these zones before it will make the move to the upside. So let's just stay tuned. Let's see how this week is going to play out on USD card. Let's see the movement is going to make. Let's just be patient with it and see the reaction. So what I'm going to be doing here with some of the members is we will just watch price reaction. We will see how price is going to react around these zones. We will see the reaction. If price is able to create, give us a sign or change its environment into a bullish environment, that is when we will be looking for it, to take the trade with a very good risk reward all the way to the upside. And we will be taking take profit around these zones. We will be taking our take profit around these zones. And I think it's a very good trade. It's a very good setup. So let's assume even if you're taking a trade from this place, you're getting like a 266 pip trade, and which is not bad. So it's a very good setup. I think we should look up to USD card. It's looking very great. Should look up to it's a super easy setup. Everyone can just trade it. So let's just keep our eyes on it, and I'm going to keep you updated with next week's weekly market analysis, how it's played out, and all that. So let's just move straightly to the next pair, and that is AUD USD. AUD USD. AUD USD is also looking very, very great. Let me just take all these things off, and let's go to the monthly time frame, and we can start making our analysis from there. What are we seeing on the monthly time frame? Clearly, on the monthly time frame on AUD USD, we can see the market testing a strong resistance zone after the market broke this zone. Let me just use my pen to, sorry, my brush, so you see it clearly. After market broke this zone impulsively to the upside, the market came back, testing this zone right here, and the market is now showing moves, bullish moves to the upside, completing the W strategy or the W pattern. What do I mean by the W pattern? Let me just draw it real quick. This was an inverse W, went all the way down, came up, came all the way down to test the neckline, and it's now beginning to make moves to the upside. And this is a pattern that I know I've been speaking about it almost every single time I make a weekly market analysis with traders CHATROOM community. And if you're not part of the community yet, I recommend you join the community, because it's not a community where we take people money for anything. We are just there to help each other. If you are beginner in forex trading, you get to make friends, you get to meet like-minded forex traders, so you also get to learn from them. So let's just get back to analysis. So like I was saying, this is an inverse W. The market made an inverse W from this session, broke the neckline and came back again to test the neckline right here. And the market has been show signs, of bullish pressure on the monthly time frame. So on the monthly time frame, you have a bullish pressure going on down there. And when you drop on the weekly time frame, things are also much clearer. Let me just take this things off so I can work on the naked chart. On the weekly time frame, there's something funny going on right here. The weekly time frame, we can see clearly that the market is currently testing a resistance zone. This is a resistance zone right here. The market is currently testing a zone, and also before the market was able to make the impulse move to test the zone, the market formed a pattern. What is a pattern? The market formed a W pattern. Like I said, whenever we say W pattern, we are anticipating that the next move will come all the way down, test the neckline before you can see any moves, to the upside. So on the weekly time frame, you can clearly see a W formation. If you can see, let me just draw it for you to see. And when you go on the daily time frame, things will be much clearer for you to see the W pattern. I was talking about. So on the weekly time frame, you can clearly see that the market is testing a strong resistance zone and also from a W formation, for which you might see a bearish pressure to go all the way down to test the neckline before you can see any bullish pressure on AD USD. So let's just move straight away on the daily time frame and see what we are also seeing on the daily time frame. My internet is quite slow here. Forgive me about that. Oh, my internet is yes, you are back. So we can clearly see that we can clearly see the W formation I was telling you guys about. This is a W formation, the market from a W formation. Like I was saying, we are anticipating that the next move should just come all the way down, test the neckline, which is the previous resistance that got broken impulsively before you might see any bullish pressure, or wait for the environment to change around these zones before you get in for a buy, for the long term buy, for the swing buy at this session. So things are much clearer on the daily time frame. And also when we use Fibonacci, or Fibonacci extension. And what does the Fibonacci extension does? The Fibonacci extension, what is does it? Is different from the Fibonacci retracements. The Fibonacci extension and the Fibonacci extension and Fibonacci retracements are quite different. They perform both things. The Fibonacci extension shows you when the next reversal is going to come, and the Fibonacci retracement shows you when the retracement is going to end and the next impulse is going to come. So after an impulse and you want to see when the market is going to reverse or when the market is going to retrace, you use your Fibonacci extension to measure the previous leg before the impulse to give you possible zones where the market is going to reverse or to start the retracement. So when you use a Fibonacci extension to measure the previous leg before the impulse, it will give us possible zones for which you might look for for reversal. So let's just measure the previous move, and this is the previous move. If you can see, this was the previous move. Previous move before the impulse. This was the previous move before the impulse, and we can clearly see that the market is testing the golden Fibonacci extension. What do I mean by golden Fibonacci extension? I mean, the golden Fibonacci extension is the levels where if the market is able to test, there's a very high possibility that the market will reverse, and that is the 1.618 Fibonacci extension. And as you can clearly see right here, the market didn't respect the first Fibonacci extension, that is the 1.272. It's broke its way, surpassed it impulsively, and now after it tested the golden Fibonacci extension, that is the 1.618, it started showing signs of a of bearish pressure. So you can see how strong the Fibonacci extension is, how it can sometimes hold price. And if you are not familiar with the Fibonacci extension, I think you have to make more research about it, because I've been talking about this almost every single time I make a weekly market analysis with the community members. So let me just put my line here for me to remember, for it to remind me where price is currently testing. So when we go on the 4 hour, mostly I'm a swing trader. So what I normally do is I use the monthly, weekly, daily for my direction, and I use the 4 hour for my entry. So after the market tested the golden Fibonacci extension, you can clearly see that it is beginning to lose the bullish momentum. The buyers are beginning to leave the market after the market tested the golden Fibonacci extension. You can see the market is trying to grab some liquidity right here. So what we are going to do when the market opens, today I'm recording this video on Sunday. I think is 4:56 here Ghana time. So in some few hours time the market will open. So what I will do with the members is we will just hold on and wait for the market to finish grabbing liquidity around this zone. We'll wait for the market to finish grabbing liquidity around this zone, and after the market show signs of pushing to the downside, then we will look to make an entry, and enjoy a nice rich and get a very nice rich reward move all the way to the downside to test this level to complete the pattern I was talking about, the W pattern you saw on the daily time frame. So clearly, as you can see, AUD USD is also looking very very nice setup for which we can look forward to trade. And like I said, I'm going to give you the update of all those pairs. That is next week's weekly market analysis. I'll make sure I'll show you what actually happened and how everything played out. If it was a loss, a break even, or a winning trade, I'll just share with you before we move on to the other week's pair. So as it still stands, AED USD is looking very fantastic, and I'm looking forward to trade this pair. And the last currency I would like to discuss with you guys, I don't want to make this video too long, is the GBP, the British Pound Australian Dollar, which is also looking very, very amazing for a very good trade. So without no wasting my time, let's just go on the monthly time frame and see what the market is trying to say. So clearly, you can see that the market is currently testing a very strong support zone. The market is currently testing a very strong support zone. If you're not seeing, let me show you. If you're not seeing, let me show you. This is the zone right here. This is the zone right here. The market is currently testing a very strong support zone for which you might see a moves from here to make a move all the way to the upside. And you can clearly see, I was talking about some liquidity stage. You can clearly see that after the market made this strong impulse move all the way to the downside, testing this support zone, retail traders know that definitely the market might be making a move to the upside, because the big banks knows that the retail traders will be looking to buying from these levels. They will try and grab liquidity around this zone. And if you see this candle, this big red candle right here, induce a lot of traders that the market was going to sell, and they got in for a sell and see the market reverse back here. So the market will try just basically the market will just try and grab some liquidity around this zone before to make the huge move to the upside. And you can see what the market is trying to do on the monthly time frame, that trying to grab liquidity around that zone. So on the monthly time frame, we're expecting a bullish pressure because the market is testing a strong support zone. And on the weekly time frame, sorry, let me just do this real quick. On the use of Fibonacci to measure the impulse all the way to the downside, you can see that the market hasn't even retraced to hit our first Fibonacci retracement level. That is the 0.382 Fibonacci level. The market hasn't even retraced to hit that level yet. So we can still expect more moves to the upside to complete the pattern. That is, if whenever the market makes an impulse move, definitely the markets have to retrace to a Fibonacci level before you might see another move or another impulse to any direction the market will go. So let's just go to the weekly time frame and see what the market is trying to do. Let me just take this thing off. Yes. So on the weekly time frame, what are we seeing? Things are much clearer on the weekly time frame. You can clearly see that the market made an impulse move to the upside, breaking a previous resistance, and the market did well by coming back to test that zone again. Where is the zone I'm talking about? This is the zone. The market did what? The market. Oh, let me take this one off. Sorry. The market did what? The market made a move to the upside, came all the way down, made an impulse move to break the previous resistance, and came all the way back to test it. So from here, you'll be looking or be waiting for the market to show signs of a bullish pressure from here to make a move to the upside to complete the pattern. So from the weekly time frame, the market is currently testing a strong resistance zone for which you might see a move to the upside from this level. So on the monthly time frame, we're expecting a bullish pressure. On the weekly time frame too, we're expecting a bullish pressure. And let's move to the weekly time frame and let's see what the weekly time frame is also trying to say to what. On the weekly time frames too, things are also much clearer. On the daily time frame, you can see that the markets formed an M formation. From M formation, where is the M? This is the M formation, for which you are expecting the market to make a move all the way to test the neckline to complete the pattern. And I've even spoke about this earlier on about the W formation coming down to test the neckline before it makes a move from this level to the upside, and also the M formation also come all the way to the downside to test this move before it make a move all the way to the downside. These patterns are super easy patterns. That will be very easy for everyone to spot, and you can even spot it on all the time frames, all the lower time frames for 15 minutes, from 5 minutes up to the monthly time frame. It's a very easy pattern for everyone to just notice, to trade and to trade with it. So on the daily time frame, things are much clearer. You can see the market forming an M formation, for which you might expect a move all the way to the upside to test the neckline to complete the pattern. And also, when you want to use a Fibonacci extension to know when the market is going to reverse, like I was saying, we use the Fibonacci extension to know when the market is going to reverse after an impulse. So you will measure the previous move before the impulse to give us when the next reversal is going to come after the impulse. I don't know if this thing is quite confusing, but it's a very super easy concept, that you can just easily grasp. So, like I was saying, you would have to measure the previous move before the impulse for us to know when the next reversal is going to come. When you measure it, you can clearly see that the market is currently testing the golden Fibonacci extension level. That is a 1.618 Fibonacci extension. And you can clearly see that after the market tested that level, you can see the strong reaction the market was giving. After the market tested that level, you can see that when the market got to that level, it started pushing side. But like I was saying, when you see this move, you just don't have to jump into it. That, oh, it's just pushing to the upside, so let me just buy. You might be tricked. Okay, so you just have to wait for the market to grab liquidity around that zone, before you look, or you wait for the market to communicate to you to show you signs that it's really going to reverse to the upside before you can bet your money or your capital on such trade. So you can see on the 4 hour that after the market tested the golden Fibonacci level, that is a 1.618. You can see how the market was consolidating around that zone. You can see how the market was giving this crazy risks, indicating that the sellers were losing momentum. So you can see how last Friday, the market was trying to push to the upside. So what I'm going to do here with some of the members in the traders classroom community is we will wait for the market. We will watch how the market is going to behave around these zones. Let me go on the monthly time frame and see stuff much clearer. Yes. Let me see my take profit. Yes. So my take profit is quite clear. So you will see how price is going to react around this zone. And definitely when the market opens, it won't just move upside. If do that, but the market will not move straight to the upside, to just continue to grab some liquidity. And by the time it will finish grabbing the liquidity, definitely we will get to see what the market is trying to do, and we'll take a very nice trade with a very good risk reward all the way from this level to the upside, to take profit. And let me just measure it in terms of pip and see how you're going to take this trade. No, this is a very nice. Let's assume it's like a 200 pip trade to the upside, which is a very good trade when you're getting this kind of setup from the market, and you execute it well. You find a very perfect entry and get into the market. It's a very good trade. So clearly, these are the pairs I would like to share with you. These are the pairs that are really looking good, on my watch list that I wanted to share with you. So just stay tuned, and if you haven't subscribed yet to my channel, please just subscribe, because I'll be sharing more valuable content with you guys, sharing more knowledge with you guys, so you guys also can can get to learn something, especially when you're a beginner. Just subscribe to your channel because there will be more free valuable content coming up on this channel. And also, if you haven't joined the traders chatroom community, it's a very huge community, especially when you're here in Ghana. It's a very huge community. It's not for Ghanaians alone, but they are mostly Ghanaians, inside the group. You can join, especially when you're a beginner, get to make friends, learn a lot from them. There are a lot of good traders in the group. Just get to learn a lot from them. It's a very good community. We are there to help each other grow as forex traders. So I hope you guys enjoyed this weekly market analysis. I hope you learned a thing or two from this weekly market analysis. Please don't forget to like and subscribe to this channel for more valuable content. Thank you.